Good morning and welcome to Purpose-Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose-Driven Finances, Allan Malina with Serwus Capital Management.
Hey, good morning. This is Allan Malina, your host, Purpose-Driven Finances and President, Serwus Capital Management. Hope you're having a great Saturday. Ice is starting to melt. It's a good time. So, folks, we have an exciting show. We're starting a new series. And, Rich, it's not like last week. Come on, bro. Not like last week.
Are you a mind reader now?
It's not like last week.
That's exactly what I was thinking.
It's better.
I don't remember the exact information that you were giving out last week. I just remember that a lot of it went way over my head.
Well, you know, I don't think it went way over your head. I appreciate you taking half an hour every week to tape the show because, I mean, you're running a company, and I appreciate it. And I know the listeners do too because I get comments when I get other people on here besides you. But if you know, folks.
Right, like, thank God, finally, someone new, someone better.
No, that's not what I get. I don't want to make the other people feel bad. So that being said, Rich, what we're going to do is we're going to cover the volatile market this week. I got some exciting things to talk about. At least I think they're exciting. And my clients should think they're exciting. But then we're going to go into a 7 or 8 week series. I know it sounds like a long time, but the first week or two, we're going to talk about your company retirement plans and why you take advantage of them, what to do, how to manage them, things such as that. Then number 2, we're going to talk about the top employer plans in the entire area. And so who would that be? That would be a Framatome, Liberty, / Thomas Road. Centra. We're going to talk all about their plans, not from not a goal for me to prospect them and try to get their retirement plans, but try to give advice to the employees of how to manage their investments. Because, Rich, I don't know if you remember me telling you, I was meeting with an executive at one of the universities here locally, and the secretary came in, and not the secretary, but a secretary of the executive branch.
I believe the term is administrative assistant.
Okay, administrative assistant. Sorry. See, the problem is
it's not the 1970s.
Right, exactly. I don't know what to call my beautician. Are you my hairstylist? Are you my beautician? What are you?
What about stewardesses? Remember them?
Yes. What are they called now?
Flight attendants.
But they don't attend the flight.
I'm just telling you what they're called.
Exactly. So, I appreciate that. So the executive assistant decided to stop by and say, Allan, I don't understand about this in my account. It has never hardly moved. And she probably over like 20, 25 years put in $100,000, and it was like 130.
Oh, can I guess?
Yeah, go ahead.
It was either still in cash, or it was in like a money market account.
Exactly. And she was like, "I'm retiring next week."
What can we do?
Right. I was like, "Oh, snap." Well, now the law is.
The good news is you didn't lose anybody.
Right. Yeah, you had no heartache. Now the law is in a company retirement plan, they take your date of your age and the date of your supposed retirement, like 65, and come up with a target date fund. That's the automatic. That way that doesn't happen. But at the same time, if you don't manage it according to who you are with your risk and your profile, there's issues. And so I know James River Media is not the ginormous Centra or, wouldn't it be exciting if you had that many employees? I would never talk to you. You'd be like, Allan who? You'd be like talking to Hannity and things like that.
You said, wouldn't it be exciting if you had that many employees? Did you see the look I gave you?
Well, then what would happen is you'd have like 4 administrative assistants.
Yeah.
And then you'd be like, hey, George over there is not doing his job, fire him or demote him to the mailroom. And, Jean is bought me my coffee. It was cold. She needs to learn to be a barista, So, I see that happening.
Yeah, me too.
Yeah, exactly. That'd be exciting. You do a great job. So that being said, what ends up happening is when people call in to an 800 number, they'll ask, hey, what should we do about my retirement plan? And it's a tough time for people to get advice. And so I'm talking about it, and we're six minutes in, and I wanted to talk about the exciting market. So I'm going to stop myself.
Okay.
Because I got all kinds of stories, and you're
I
like,
know you do.
Exactly. It may not be good or bad, but I got stories. So check this out. Rich, I know you've been pounding it, man, and, the magazine looks great. I got it in the mail, and I love your peel-off label.
Oh, you do.
What an amazing thing, But that being said, layout is great. Your team's doing good. The radio station. But did you hear about silver this week in the past, 6 or 7 trading days?
No.
It got beat down 48%. That's bad.
Yeah.
That's really bad.
What happened to gold?
I think it was down 30, somewhere in that range.
So not nearly as bad, but not good.
Yeah, right. My expectation is give it a month, it'll be at all-time highs again.
Really?
Mm-hmm. And I could be wrong. I don't manage it according to 6 weeks from now. In client accounts today, or not today, we're taping on Friday. On Friday, we bought more gold and a little bit more silver because we reduced our exposure. And if it continues going up next week, we'll buy a little bit more and try to get to a full portfolio version of it. Not version, but allocation is the better term. But there's all kinds of things that are happening with precious metals. There was this guy, at least I think it was a guy, because I don't read Chinese. Okay, I had to use AI in order to, because I found the exact letter that the Shanghai Futures Exchange put out to 6 accounts. They actually almost cornered the market of the silver and shorted it. And they were shorting almost the double the annual production of silver in the entire globe.
Wow.
And so there was issues. And so those 6 accounts were actually slapped on the wrist. And, excuse me, and then there was issues in America. And it's rather interesting of all this going on that it's not really an issue with people wanting silver. It's not an issue with production. It's an issue with the futures market. Because here in America, the COMEX, if everybody requested the gold that was long or short the futures, they don't have enough to fill it. But realistically, it's only generally 8% that actually do that, actually want the physical. So there really isn't an issue. But the internals of silver is what the problem was, not the demand, not the need, things such as that. I wish you had your computer up. You don't have to.
What do you want?
No, that's all right.
I got a computer.
I wanted you to, I'll tell you, you can visualize. You're a smart guy. IYG. It is software stocks. Okay?
Mm-hmm.
So in the past 18 days, software stocks, we're talking SaaS, we're talking any of the software companies. Okay? If you were down 10% in 18 days in these software, that'd be a bad 18 days.
Mm-hmm.
Imagine being down 23% of software. That's not a good time. And you say, well, Allan, why is that? Well, the reason being is because I know you had the guy from Lynchburg College about AI.
Yes, Charlie Butcher.
Yeah. Did you guys talk about Claude?
We did not.
Well, Claude, and I'm not an expert on all the companies, but Claude has come out with these where it, in a very short amount of time, like a week and a half, is producing software, and it's a concern that all these software companies are going to become obsolete. And so that's in 18 days, IYG, which is the big boy, software ETF, it was down over 23% in 18 days.
Wow.
And then the final thing that has happened, I think some listeners, and I know some advisors are like, Allan, you and the quad system and your QPM system is a pile of hooey. That's saying it nicely. Or it's a pile of manure, pile of crap, Allan. Well, check this out. Hedge funds in January, I'm not going to bore everybody with the quote, but Michael Hartnett, I like the guy. He's from Bank of America. He was saying that it's very painful in the hedge fund industry simply because they were long three things: Mag 7, crypto, and precious metals.
Mag 7, Magnificent 7.
Yes.
Google, Meta,
Amazon, Netflix,
Amazon,
those.
NVIDIA,
and Microsoft. Microsoft, I think, is last time I don't know what they did Friday, but at one point they were down 18%. Microsoft in the past month. And the problem is they were in these three areas. And if you look at crypto, it's been beat like a whole freaking ranch, man, of rented mules. I don't know,
Dude, my favorite thing is just seeing what analogies you're going to come up with.
Right. I mean, dude, it's like you take an atom bomb and put it into a large lake and all the fish are dead. I mean, if you were to look, one day this week, I think some crypto was down 15% in one day.
Wow.
I mean, it's ugly. And so the hedge funds are in these areas. And in the past week, it has not been good for hedge funds. Because what's happened is hedge funds, if they had followed the quads, they would have been long these three things: small cap, staples, and energy. QPM wasn't long energy because that was more of a quad 3 area, not a quad 1. But the issue that has happened is because they were short small caps and staples and long Mag 7, crypto, and precious metals. In the past week, those three got hammered. Their longs got hammered, and their shorts rose significantly. So what happens at a hedge fund when that happens? The person managing, because what happens is they have little silos, and they'll have like 20, 30, 40, 100 traders. And if the trader is sucking some significant wind, they're going to tap on the shoulder. And that tap on the shoulder means two things: reduce your risk or your portfolio size, or sorry, bro, you don't have a place tomorrow. So what they do is they either liquidate half or whatever the percentage of the portfolio is, or they liquidate the entire holdings of that particular trader. And it doesn't matter what the price is. They just liquidate it. And so as an example, Wednesday, the markets were getting pounded. When I was analyzing it, there was only the U.S. dollar was up. A few bonds were up, but I don't really count them into equities and crypto and metals. All the metals were down. All the stocks except for utilities, and end of the day, some small caps started rallying. But I track 115 a day, ETFs that covered almost the entire globe. What ended up happening was it was ugly. And so because of those three things, it caused a lot of internal volatility. The QPM said to go short 4 times in the past 6 weeks. I didn't because of the quad we're in, because I knew the quad we're in a quad 1. So that short would have been nothing. It really meant to reallocate. So we reallocated from large cap to small cap and international. I've told you that the QPM for the month of January is 4.5%. That's good. Hopefully we have a good return this month. But the significant reason is we follow the quads. Now, folks, I'm excited about the next half. We're going to do a 30-second break. Stick around. We're talking about your company retirement plan and why you need to be in it. 434-316-0246.
Information you want, truth you demand. It's Brian Kilmeade.
How about saying that Marjorie Taylor Greene has got a butch body? Congratulations on that. Just tell me, who do you want to lead with those words? That gets traction because a lot of people think it's totally idiotic and stupid. There's so many legitimate issues going on here: the cost of living, cost of housing, cost of wages, a trade war. So what makes you think that in politics you should avoid talking about that stuff?
The Brian Kilmeade Show, weekday mornings from 9 to noon on WLNI. And now, back to Purpose-Driven Finances. Here's Allan Malina with Serwus Capital Management.
Hey, good morning again. This is Allan Malina, your host, Purpose-Driven Finances, President, Serwus Capital Management. Don't know why I clapped as we were starting out the show or second half of the show, but I'm excited because one thing that I'm very passionate about, besides, analyzing stocks and my math and things such as that, but is helping people achieve the purpose and plan for their life. And one thing that I have noticed is that when you have your 401k, 403b, 457, and yes, it includes simples, SEPs, all of those things, but we're basically just say your company retirement plan, your individual 401k, that for a lot of people, it's going to be their largest investments, and it's not in their brokerage account, but it's in their retirement, your IRA, your Roth. So what we're going to do this week and next week, we're going to tee it up about why take advantage of it, some things you should be doing in advance of retirement, which, that could be 30 years from now, it could be next year, it could be next week. Rich, I have a client who's looking to retire in the next 2 weeks, and we were meeting, and he's excited. And so we're going to talk about moving his assets from his retirement plan into an IRA and what that looks like. So, folks, it's your 401k, your retirement plan is your largest investment. Now, it matters not just how much you save, but how the plan actually works for you. A couple things: target date funds, broad market indexes. And one thing that's interesting, Rich, back in your day when you were an advisor, did you remember any special investment?
Can I just stop you for 1 second?
Yeah.
How old do you freaking think I am?
I don't know.
Back in your day.
Right. Well,
Back in your day.
the industry is so changed, man. Because what was that, 2012?
I know, but it just sounded,
Right.
it made me feel so old.
No, you're not old.
Back in your day.
Back in your day.
Oh, my goodness.
When you went to the advisor and you looked at the ticker tape.
Right. Right.
Hey,
Right.
were you there for the...
Back when I was calling in my orders to my runner on Wall Street.
Right. Were you there for the ticker tape parade when Joe Namath did you throw out ticker tapes?
Oh, jeez.
No, I didn't mean that negative, Rich.
I know.
It's just one thing that I was really trying to tee it up to where the diversity that the U.S. government and allows for retirement plans is expanded tremendously.
Yeah, you were saying back in my day. Finish the question.
Yeah, I was an advisor back in your day too.
Back in those days.
But it's
back in
totally
the old
changed.
days. As far as what the investment options were.
Yeah.
Because they were really very limited.
Right.
If I ran into a retirement plan that had as many as, say, 20 options,
right,
it was a lot.
Exactly.
And that was really just when, if I remember correctly, those target date funds were starting to kind of pop up.
And you'd have like 10 target date funds, and the other 10 funds were like, what the heck, man?
Yeah.
But now you can put gold in there. You can put crypto in there. You just have to do a disclaimer. Do not put more than like 5% of your portfolio in crypto, because it's really sad what's happened the past week. But that being said, the availability of diversity to occur is tremendous. The other side of the coin is 401k, 403bs can actually do ETFs now. A lot of companies aren't taking full advantage of that. We're not talking about the companies. We're talking about the individuals. So here's the reasons why to use them. I'm going to ask you, Rich.
Ask me.
Why should people use their retirement plan, their company retirement plan?
Well, there are a number of reasons.
Yeah.
One, especially if it's a traditional and you want the tax benefit, you put your money in there pre-tax,
right?
Which lowers your tax burden for your CPA,
right?
The other is many, not all, right, have a match.
A match. Yeah, look at that.
And now all of a sudden it's I managed a simple IRA where people would put it in to get the match and then they take it out every month. And I'm just sitting there like, what are we doing here?
Exactly.
But the match is huge because even if it's 3%, you have to at least put in as much as the match.
Right. Liberty's is 5.
Is it?
Framatome is 6.
Wow.
That's pretty good. That's top tier right there. That's 2 companies. I know Liberty isn't a company, but they are incorporated. They're taking care of their employees. They're doing a great job. Same as Framatome. I checked them off, man. I did 5. You did 2 out of 3. 2 out of 5. Man, that's pretty good.
Thank you. I don't remember everything from back in my day.
Yeah, back in your day. I'll get you a ticker tape just to remember. My wife is sometimes, Alan, you're so awkward sometimes. And sometimes I am. Sorry, bro. But a couple of the other things is automatic. You don't have to think about it. Because I don't know about you, Rich, but you get an extra $500 in there in your account. And you're like, I want to go buy this or buy that or go here or go there. At least that's the way I am. I want to go buy a new tool, go to another antique store.
It's easy to spend if it's sitting there.
It is, but if it's automatic, it's a very beneficial thing. Also, it reduces market timing. If it's automatically invested, then there is dollar cost averaging. But what ends up happening is over time, it's a very beneficial thing. And then I Googled this because I was really wondering who said this. It's attributed to Albert Einstein, but there is no empirical evidence that it actually came from him. But it's attributed that Einstein said that compound interest was the most powerful force out there.
Wow.
And it is quite amazing. I don't know if you've talked to your sons or someone who just started out in their retirement and like, I got $1,000. It went up $100 this year. Doesn't sound like much. But if you save for 30 years, that $1,000 and you continuously compound the returns, but also continuously contribute, what ends up happening is in 30 years, that might go up $100,000 a year. 100,000 and 1,000 is the exact same percentage. It's just people look at the dollar figure and say it's not very much. So what do? Oh, wow, I just got the deposit my simple. I'm going to take it out. And they miss out on the compounding interest. Now, here is an area that, we have 7 minutes, and I don't know if I got enough stuff to talk about, Rich.
There's a first for everything, I guess.
Yeah, exactly. People can just listen to my music after, if I run out of things to say.
Yeah, I'll believe it when I see it.
Yeah. Now Rich,
what are some of the biggest mistakes you see people making in their retirement plans?
First one, you already brought it up. They don't take advantage of it.
Mm-hmm.
Number 2 is they take the money out as soon as they can. Or they say, you know what, I'm going to continuously putting into it. It's not going to be a big thing if I take out $1,000 right now. My account's only $2,000. That's some of the biggest mistakes people make. And
the one you touched on, not knowing what it's invested in, and you're sitting in a money market.
Exactly. That's like.
I can't imagine what was going through her head when you explained to her your money was never invested.
Right.
Ever. Crazy.
It's horrible. I was talking to a local, one of my clients. They're in one retirement plan. They have another business. Their advisors have never invested the money.
Wow.
And I'm like, what the heck, man? That's not even allowed.
Let me ask you this, too, when it comes to retirement plans. And I think we've talked about this on the show before. But one of the neat little tips that I've heard and maybe even given to people, even here at James River Media, is, increase what you're having deducted by 1% a year, either on the first of the year or on your birthday. Pick a day.
Yeah.
And, because most likely you won't miss it. You won't miss an extra 1%.
Right.
But think about it. If you do that every year, in 5 years, you go from 5% to 10%.
Exactly.
And then presumably, unless you work at James River Media, your salary goes up. That's just a joke. Sorry.
It was funny.
Sorry.
I saw you in the new Escalade. I know.
Sorry to all those people who are working at James River Media going, I never got a damn raise.
Yeah, no, I see your employees with a new Escalade.
You do?
Yeah, I see them. They're rolling in the dough. I totally agree with you. And those are some of the mistakes. I tell you, one of the things that really perturbs me, and this is not a shot on the employer or employee, it's on the firms that actually provide them. Did you know that a broker-dealer, if they have their retirement plan, they won't give advice? If you call the 800 number, they won't give advice as to the allocation. And a lot of times they'll say legally I'm not allowed.
You mean the company that the investments are through?
Yes.
Like, I'll just use an example. I know because I've had one in the past that Prudential, the investment, you log in at prudential.com, blah, blah, blah. Even though they weren't the ones, right, who did so you're saying if I picked up the phone and called Prudential?
They won't tell you how to allocate it. And see, that's the problem with so many people.
Because then you're trying to figure out who I call.
Who do I call and what do I do? Mm-hmm. And here's what they'll do. They will look at the past investments and see which ones did the best last year. That can be good, but that can also be really bad.
Yeah, that can be really bad.
Right.
Because typically the same investments aren't doing well year after year after year.
They're not.
Which is why you rebalance.
Exactly. Or what they'll do is they'll look at small cap and go, I want small cap, or I want all this one big area, and they won't diversify, and it will cause issues. Mm-hmm. They'll be like, why am I down 25 or 30%? The next thing that happens, and the reason it bothers me is because, and the reason they don't give you the advice is because they say it's a legal issue and they don't want to be held responsible if the investments go the wrong way. So here's what they'll do. They will send you a link, and it's a mathematical formula of your risk tolerance. When I was at another firm, it was like 12 pages. If it was hard copy. But they'll go on the website, and they'll come up with your conservative, moderate, aggressive. And then they'll say, the computer will say this is what it is. And then you agree to it, and then it'll say this is how you need to choose the portfolio. It's basically a, how can I say it for radio and for Lynchburg residents? Covering your tail, CYA, whatever. That's the reason why. And the thing that frustrates me is when a firm is taking all the fees, why can't you give advice? It's not like they're asking you to, guarantee that their kid is going to get into Harvard and get straight A's and become the president. It's so many people who are dads or moms just trying to figure out what's the best for me, what's the best. And so it's frustrating to me. Number two, what ends up happening is a lot of people, they just want the advice. And the nice thing is from a registered investment advisor, a fiduciary, they're allowed to give advice. But when they're set up, it's not always fully understood. Now, you advisors who are listening to me right now, if I'm wrong, call Rich. Rich, and complain and say Allan is wrong.
Get in line, man.
What's the number? Is it that number right there? I'll give it, Rich.
846-8255.
Yeah.
Call or text.
Yeah, call or text. Or you can call me, 434-316-0246. So, folks, here's what we're going to do. We're going to help you decide what to invest in. We're going to help you go through the understanding. And so what I'm going to do is through the website, if you go through the retirement planning part, I am going to offer a service that every quarter we're going to send out the suggested asset allocation that you should have for your risk tolerance. And no cost, and I'm not going to bug you to become my client, just going to offer a free service. Give me a call, 434-316-0246.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.